Hi, it's Marcel with Guaranteed Rate, and I wanted to give you a quick market update specifically on people that are self-employed. So there's been a lot of information going on. I've actually heard from some people that self-employed clients can't get a mortgage at all anymore, which certainly isn't the case. But I do want to update you as to specifically what some of these changes are in the guidelines and how those changes are going to affect the mortgage process. So if you are self-employed, meaning that you are receiving 1099 income, do have your own business, do have kind of that self-employed status, in those circumstances, there's going to be additional documentation that's required because of COVID based upon the rules from Fannie Mae, Freddie Mac, FHA, and VA. So with that, there is going to be additional documentation. So what does that mean? In essence, normally for someone that's self-employed, they would turn over their past 2 years' tax returns, and that would give a good idea of what someone's income is. However, with COVID, all of that may have changed. So now, if someone is self-employed, not only do they have to give the last 2 years' tax returns, but also a year-to-date P&L. So what is it that underwriters are looking for here? They're making sure that the income stream, which is reflected from the previous 2 years, is also continuing this year, meaning that your business has not been shut down or negatively been impacted by COVID. Obviously, there's a lot of businesses that are, so that P&L is certainly something that can kind of paint a more clear picture. However, in addition to that, also bank statements are going to be required. That means that your business bank statements are going to be requested, and again, they're looking to make sure that the income streams that are currently going on are going to match what was on the previous 2 years' tax returns. So with that, if you have a business and it's been negatively impacted by COVID, obviously you're not going to have any of those deposits. Here's where it gets a little tricky. A lot of times people are self-employed and they don't actually separate their business income bank statements with their personal bank statements. So it can become a little bit more clouded when an underwriter is looking at those and saying, okay, are these business expenses? Are these personal expenses? So definitely, if you are self-employed, be aware that the documentation requirements are going to be a little bit more stringent. So get started early. Turn all of your documentation into a mortgage company and loan officer and allow them to review that information and make sure that you're not going to end up having any bumps. Also, keep in mind that for self-employed individuals right now, and actually anyone that is buying a home, mortgage companies are doing a final verification of employment to where people have to send in their most recent pay stub. So you may have already turned in a couple months worth of pay stubs, and then all of a sudden you're at the week of closing and the mortgage company asks you for another pay stub. This is because, in essence, mortgage companies are now required to check and see, have you been still making the same income, or has your income been adjusted by, let's say, a 20% decrease? Have you been furloughed? I know a lot of companies have recently had layoffs. These are all things that the mortgage companies are looking for when they're looking at those most recent pay stubs. So be aware of this. It is going to be a couple more hurdles to jump through in getting a mortgage, but it's definitely something you want to be aware of, and if you plan for it, everything can certainly go smoothly. Again, I'm Marcel with Guaranteed Rate. Please give me a call with any questions. Best number is 972-672-3246, and I hope you have a great day. Thanks.